What is going on, guys? This is Yix here at Mag Crypto and welcome back to another video. Before we get started, if you haven't already done so, please like, subscribe and follow the channel. Would really appreciate that. With that out of the way, so I'm going to be covering an article from one of the founders of Ocean Protocol. He released an interesting article regarding Web3 Sustainability Loop. So I'll be covering that today. Ocean Protocol is a crypto that I covered not too long ago. Their whole mission is to basically give people the ability to sell their private data to those that need it or that want it, and they're using AI to help them facilitate that mission. Obviously, it goes a lot more deep than that, but essentially on the surface level, that is what Ocean Protocol are about. So we're just going to run through this article real quick. The Web3 Sustainability Loop. Before we go deeper into the article, what is Web3? So Web3, the start of a decentralized internet. So Web3 marks the next evolution of the internet where websites, applications or services are controlled by their users. When you see the phrase Web3 compatible, this often means that the website or service interacts with the Ethereum network. In the early days of the internet, users mainly consumed content from websites. Maybe you had a personal web page, but it was static and it was hosted by your ISP or a site like GeoCities. Web 2.0 was the rise of social media. This era saw a notable shift towards user participation. Social media sites like MySpace, Facebook, YouTube became the norm, and before long the majority of content was being generated by the users of a website. However, these users don't control the content they create. Websites host their content for them. And Web3 gives the power back to the people. So Web 2.0 relies on users to create the value, which the owners or host can reap the benefits from. In most cases, you have little to no control over your data. So Web3 basically, applications sometimes referred to as dApps are built on decentralized peer-to-peer networks like Ethereum and IPFS. Instead of being run by some company, these networks are built, operated and maintained by their users. So Web3 is the future of the internet that treats it like the shared infrastructure it is. It's a future where everyone can contribute value to the internet and be rewarded by it for it. So Web3 is the next evolution where you are basically in control of your data and you reap the rewards of the value that you create, as opposed to the likes of Twitter, Facebook, those companies, centralized companies owning your data and doing with it what you will when you're the one who's creating it. So that's Web3. Going back to the article, there's quite a bit of content that it goes through where he talks about the preface to his point at the end regarding Ocean Protocol. I'm not going to go through all of it. I've highlighted the key bits that are important for this video. And to be honest, the article's a bit long and it's a bit boring, I'll be honest. So I'm not going to go through all of it. But let's get the show on the road. The prequel surveyed existing Web3 grants programs. The challenge to any grant program is, do the dynamics truly support growth and long-term sustainability? What if grants are black holes, or if grants end, will the ecosystem survive? So it's talking about Web3 applications and how they can remain sustainable, and how a lot of the current models don't actually have the sustainability aspect to them. As it said, what if grants are a black hole? So the grants that these projects are receiving, again, don't have a sustainability aspect to them. So they're basically just going to go down into a black hole and it's not going to work out in the end. The growth and sustainability loop can be used for Web3 projects. And so this is the sustainability aspect that they're looking to, or they have already incorporated into the Ocean Protocol. So this is the content. So we're just going to focus on these two bits. The Web3 Sustainability Growth Models, powered by transaction fees, and includes token generation, and it gives an application of the Web3 Sustainability Loop to the Ocean protocol. So let's go down to that. So the Web3 Sustainability / Growth Models. So this is the diagram that goes with it. So founders generate tokens. On the left, they get some initial cash by selling some tokens. They build product, then ship it to power a nascent ecosystem. Then the aim is to grow the token value. To help this, the dynamic should be designed for token to increase as usage goes up. The founding team sustains itself by selling down more tokens for fiat over time as they do work to improve the product. The main problem with this is that the founding team needs to continually dip into its supply of tokens to help fund itself. That supply continues to dwindle, especially if the project has to pivot towards hitting product market fit. The team will need to sell company stock or a second token, which then risks misalignment of incentives. It introduces revenue generation. So some of the improvements have been added to the below image to the original diagram. It introduces revenue generation. Revenue is then looped back to workers. So this is revenue generation. It's looped back to the workers and other project teams. So you can see this is much more sustainable as there is a network generation, a revenue generation aspect to it, which in itself will go back to the curators and they're able to basically work on essentially increasing the value even more. So this whole dynamic makes token value increase. So that is the improved revenue model, or that's the improved sustainability loop. However, there was another problem that they encountered. Too little revenue, too late. If rates are too high, it will either get forked and redeployed with lower rates, or it won't get adopted because it seems as too extractive. If rates are too low and usage isn't sufficient, then revenue is too low. However, the solution to that is it takes a key change rather than disperse all the tokens at the beginning of the project. Disperse a large fraction of tokens over a much longer period of time to get to the workers that are adding value to the project. This gives the team a longer runway to iterate towards product market fit and more funds to catalyze growth once PMF is achieved. And he calls this Web3 Sustainability Loop. So as he said, the key part was the token generation is dispersed over years, decades, or centuries. So through the use of the governance token, you can vote on the money allocation. So that's another improvement that they made. And all this looks to make the token more valuable as usage increases. So as the usage increases, the token value increases as well. And on top of that, they also have a buy and burn, which also increases the value of the token. So now we get to how it applies to the Ocean system. So Ocean Protocol is a Web3 project that aims to spread the benefits of AI by equalizing the opportunity to access data. For Ocean, we have created a system-level design that follows the pattern of the Web3 Sustainability Loop. The image below illustrates it's designed to achieve sustainability over decades via funding that goes to teams that continually add value to the data ecosystem. In Ocean's case, the Web3 ecosystem is a data ecosystem of data marketplaces, data custodians, etc., powered by Ocean tools. So through the Ocean DAO and the criteria of growth and the mission, they decide on what to work on. The workers, the core developers, site developers get to work with it, and they also work to generate revenue, network revenue, and this gets fed back into the loop to the Ocean DAO, who decide on what to spend the money on essentially, and that keeps going Obviously, what they spend the money on will help to generate more revenue, and so on and so forth. And all this, the dynamics for the ocean token increases, or the value of it increases as usage increases. And again, the buy and burn also increases the value of the token. So this is just summing up what I just said a moment ago. The Ocean DAO curates funding coming from network revenue and network rewards. Workers get funded to improve Ocean core software, build applications using Ocean, spread awareness, grow data supply, and more. Project selection criteria are have to be greater than expected. The expected ROI have to be greater than 1, and have to be aligned with Ocean missions and values. And we envision a data supply mining program to kickstart growth of data supply. You can read the full article if you want to get all the information, and I do advise you to get the full picture. I'm only giving you the surface level essentially. But regarding token design, the token design is designed such that as the usage of Ocean grows, increase the value of Ocean, as in the network and the token. And again, please read the full article to get all the information, because obviously I'm going through it fairly quickly. But to conclude, the core idea of the loop is to direct both network revenue and network rewards to work that's used for growth. Network rewards help to kickstart the project and to ensure decent funding. Network revenue can help to push growth further once the Web3 project achieves traction at scale. So to conclude myself on this, obviously you can see Ocean have really thought about sustainability and how to keep the project going on after the initial jump start they will get from the token revenue. So just to see the level of depth they've gone through in terms of how they are going to make sure that their model is sustainable is very encouraging to see, and it's very clear and simple to understand. It makes perfect sense. So let's just finish up with some technicals. So I'm looking at the Ocean USDT pairing on Bittrex, and it's a bit clearer on the daily, but you can see that it's in a Fibonacci play at the moment. You can see that it's hit the 786 perfectly with this wick. So potentially if this continues, then it could set this up for a nice play up to the 0.727 extension, or even 618 and the 786. And that is roughly 70 cents, 80 cents, and 81, 82 cents. But to look at Ocean, it's also very beneficial, or it's important to look at Ocean with the BTC pairing, because there's more volume in this pairing. So it's when there's more data, it's more accurate. And you can also see that there's a Fibonacci in play for this as well. However, it's hit the 618 in this instant, not the 786. So again, this could really set it up for a nice play to the 2.27 extension, or further to 618 and 786 extensions, and that's at 6,600 Satoshis. So we've had a strong run in July and August and have corrected since then. I think there's potential for some more correction, so we'll have to see. But after that, I think the rally will continue. This could be sometime in mid-September or maybe later. But I think overall in the mid to long term, we are in good momentum. So let's see how this goes. That'll be all for this video. I hope you got some value from that, and see you in the next video. Peace.